as we are live here today, right? We also have the price of silver down about almost $3 now, which I will pull up in a second. So what do you think is happening, and what would you say to folks right now?
Well, I've said along all the way that markets are obviously volatile. They've become volatile because so much money has been printed by the Federal Reserve, and there are large long positions outstanding and large short positions outstanding. And with zero interest rates, there are a lot of leverage positions outstanding. In other words, some people borrow money to buy something, and some people borrow money to sell short something, and so forth. So it then leads to some volatility. But I don't think that one should look at the silver market in an isolated way. You have to look at it in the context of the precious metals and the commodity markets. And the precious metal markets last year performed very well, including silver was up more than 40% last year. So it's not a depressed commodity anymore. Now, someone may argue it's depressed from a very long-term point of view, and it's depressed because the Federal Reserve and other central bank in their endless stupidity will continue to print money. That is all possible. But I'd say this huge buying, both in physical and in the futures market right now, is not a very good sign. It's kind of a sign of a euphoria. And the precious metals markets have been kind of correcting downwards since last August. But the enthusiasm for precious metals has not diminished. In other words, investors have not turned bearish yet. And I'd like to see a further sell-off in precious metals, maybe another 10% or so, to flush out the speculators, the people that are on margin, and to establish a longer lasting low. But I haven't seen this yet. Yesterday, I was actually surprised that the market would spike this or spike as much as it did. I think, as I said before the spike yesterday, we were kind of in a downtrend. I think this downtrend is not completed. And afterwards, I think the precious metals will be fine and will make new highs eventually. But for now, I belong to the more cautious observers and participants of the market. I own silver, I own gold, I've owned it for more than 30 years. So, you're talking to the converted, but I'm just saying, you don't want to be right about the long term and get wiped out because of a short-term adverse movement, and you were heavily on margin, and your margin is called, and you can't meet the margin, and the broker sells you out, and just before the market really takes off.
Yeah, that's great advice. Certainly, if there's ever a market where going on margin is risky, this would be it. And we'll take a look back here on the Kitco chart, down 230 on the day. The futures, you see we are down 291. And Dr. Faber, I think, again, the question people are wondering, because maybe different from GameStop, the people in the silver market have seen this. There's a lot of new attention. And in terms of the order flow, yesterday I asked one of the owners of Miles Franklin if that was the busiest day in terms of people buying physical silver, if that was by far and away the busiest day they've ever had in the history of the 30-year company. And she writes back and says, it's like toilet paper after Corona. Perhaps I can read here. This is from my partner, Yara, who handles our orders. Orders are overwhelming, brand new stackers. People want to get physical silver regardless of price. No one flinching at higher premiums. They want it ASAP. I've also talked to both of these people, and I know it's like you have their like 800 emails in an inbox, phone ringing off the hook. So there's logistical delays. Any thoughts on that?
Well, my thought is that I would love to buy silver when instead of everybody buying, everybody would be in a panic selling mode. That would be the ideal buy point. I think in investments, you have to kind of get used to the fact that you want to be a buyer when everybody's a seller, and you want to be a seller when everybody's a buyer. Now, many of your listeners will be disappointed to hear this, but the fact is simply buying in a buying panic has never been a very good strategy. If there is a buying panic, for sure, there will be a correction. And we have this correction today, and it may last for a while until people are discouraged, and then will be a better entry point.
Yeah, that makes a lot of sense. And let me get my screen share back up here, because we've seen that to some degree here. And I will pull up the, on the bottom, you can see the volume. So for people who are new to silver, when they see this, when they see heavy volume, as best as I've been able to figure out, I haven't heard anyone help me with another explanation, but it seems like someone just hammered a lot of paper silver on the market and they drove it lower, which, like you wisely pointed out, can affect the price, and that is relevant. But in terms of like the underlying, like whatever probability there was of a short squeeze last night at $29 silver, does what we see here, has that changed the probability of this getting out of control, or is this just short-term trading noise?
I want to explain why a short squeeze on silver in the current environment is most unlikely. First of all, silver and gold are not perishable commodities like coffee or wheat or corn or sugar. In other words, a perishable commodity gets used up every year. You get it? People drink a certain quantity of coffee, and then there can be a situation where not enough coffee is being produced. And this happens regularly in the case of orange juice, which is a very narrow market. It's a very thin market. When little gets produced and consumption is steady, then a short squeeze can develop and commodity prices can go ballistic. In the case of silver and gold, all the gold and all the silver that has ever been mined is still available, okay? It's not that there is a shortage of gold and silver. At a certain price, people will sell it. And I've seen it here in Thailand when gold was strong a year ago, and we had also lockdowns as a result of COVID, and people didn't have money. They went and sold a lot of gold in gold shops. In other words, that was the only thing they had to survive. So they sold gold. And so rising prices in gold and silver lead also to increased supplies. Then there is the mining supply, which can be increased if the price is high enough. You understand? It's all a question of price. I think, in my view, and I've never sold any gold in my life. I just keep on buying every year, every month. And I have no intention to ever sell any. So you're talking to someone who is actually a convinced gold buyer. But I'm realistic about, even if you are optimistic about the long-term outlook of gold, and you have to also think the consequences of you being optimistic about gold. Being optimistic about gold and silver is being pessimistic about financial assets and being pessimistic about the durability of the current financial system. You understand? Maybe the best for all of us, except for people that have all their money in gold and silver, but the best for us, if people have, say, a house and people have some stocks and so forth, is maybe that gold and silver goes up, but that it doesn't go up too much, because if it goes up too much, the world is probably bankrupt. So in this, under these conditions, yes, I'm in favor of holding precious metals, including silver, and I think this year silver will continue to outperform gold, as well as platinum. I think platinum will also outperform gold, but they both will go up. The question is by how much? And as you've seen last February, when the markets collapsed, what happened is that gold and silver also went down. Why? Because there were margin calls. People had to meet their margins, so they had to sell something. So all I can say is I would own gold and silver, but I wouldn't speculate in it. If you want to speculate, I want to tell you, it's better you go to a casino. The odds are better in a casino than with anything that is regulated by the government, because the government is sure to make everything worse, but not a little bit worse, but much worse than if nothing had been done by the government.
Dr. Faber, I think that's a new highlight in the time I've been doing the show. I'm gonna make that the motto statement. Government makes everything worse than if they hadn't been involved. And yes, you also mentioned in there the supply and demand. And I actually have been looking through the data here. So I have a question. I'll read it out loud in case that screen's small, but basically we have the latest figures from Silver Institute.
Yes.
And the annual supply, we'll call it 1 billion, has been pretty constant, a little lower last year with the shutdowns. Yes. And here's industrial jewelry, photography, silverware. And I would add in net physical demand, because while this is, a number that can fluctuate, if people are buying it like toilet paper after Corona, then I don't think this number, I asked actually the owner of the shop last night, is there any chance this number is going to be lower this year? He thought that was hard to believe. So last year, the supply was 962 million. 930 million was already accounted for. And here we see we did have that record 350 million ounces go into SLV and the Silver Trust. But really, most of that was financed with the credit card because they ran a deficit. And so basically, you could look at it at 32.5 million, what was actually available for supply to SLV and the trust. And in just the last 2 trading days alone, 55 million ounces of silver or shares have been purchased through these trusts that say they're backing silver in there. So,
yes. But here you can see that in November, this big red line here.
This one?
Yeah, yes, exactly. And then you look at the price, then I think it was a better time to buy then than it is now.
Yeah, well, certainly, obviously, you have the fact that it spiked, now coming back a little lower today, although you and I have talked before about how there is, the money printing, there's all these contracts where you have essentially a fractional reserve system in the metals. And is there some point at which, if this buying keeps, or actually better yet, when there was that 300 million ounce deficit last year, where is that silver coming from? That's what nobody seems to be able to figure out.
Yes, but this is also in the gold market, and that's what I tried to explain. The silver market could be in deficit production for 10 years and the price moves down because the above the ground silver quantity is very large. And say people can bring their dining room set, which they inherited from their grandparents. Nowadays, nobody buys any more silver for your for the cutlery. But in former times, it was custom to have silver. And so they can bring this and melt it down. Then the entire industrial production that requires silver, that can be recycled. There are certain commodities that can't be recycled. You know, if you eat an orange, you can't recycle it. It's recycled automatically, but you can't eat it anymore. So as simple as that, where silver and gold and platinum, you can recycle. A problem will occur with the batteries, because I think a lot of things, a lot of commodities going into the batteries cannot be recycled, but that is a different subject. But what I want to say is that there could be surplus production and prices of silver go up a lot, and there can be deficit production and silver prices go down a lot because people sell the existing holdings. Say, I own silver, I own gold. If I see the price is high, I could be tempted to sell. I don't need to sell, I won't sell. But I'm just saying that somebody else, and you can see yourself from the high trading volume, there's somebody that is selling. It's not all buying. Someone is supplying the market. And that someone is not completely stupid, believe me. It's a lot of kind of commercials, well-informed people, when they see the price of silver at this level and they own a mine somewhere, their cost of producing the silver, if it's $10 or $15 an ounce, and silver is a byproduct, it's usually produced with other commodities. If they see that they can cover their cost well, they will sell forward. It's not necessarily speculators that sell forward, but people that own mines that produce, they sell forward to hedge their production, to get to hedge their price of the sales.
That makes a lot of sense. Dr. Faber, a question that I'm grateful you're here to answer, because you've seen Wall Street, you've seen every trick in the book, you know what good people look like.
No, haven't seen every trick in the book. For that, you need to live in Washington, D.C.
Well, that is true. Although, as an expert of at least the financial shenanigans that, you know, and we know banks sometimes do cross the boundaries, I'm curious if you think that, you know, here's JP Morgan, who a couple months ago was fined $1 billion for admitting that they manipulated the market. Again, they have a big name, and just yesterday, they put out a report downgrading the sector in silver. I haven't seen anything, at least in this article. They didn't comment on the underlying physical demand, but when you talk about the large volume that we see, are there funds that could be reacting to this headline put out by JP Morgan yesterday?
Well, maybe, you know, the market, whether it's in stocks, bonds, commodities, or precious metals, consists of both people that have a long-term view and have convictions, and momentum traders. So say someone issues a sell recommendation on Tesla or Google or Amazon, there will be some people that sell it because they're momentum traders. They think, okay, it's an important house that recommends to liquidate the positions or sell short the positions or to get out of the position and so forth. So yes, there are some people that will react to short-term movements. But for me, as I said, every day somebody recommends to sell something that I own. So, if each time I would react, I don't know, I'd be busy buying and selling all day long, which I don't want to do. And from my experience, the people that have made money out of their investments are long-term holders, because if you look who is among the richest people in the world, every 10 years or so, they have statistics. So some years, the richest people are people that own oil. The other time, that own technology companies. The other time, that own finance companies and so forth. But consistently near the top are people who own real estate. They own the real estate and their families have owned it maybe for 100, 150 years. And the reason they are rich is the real estate is very difficult to sell. They don't want to sell. It's such a good thing, also tax-wise. So I'm actually suggesting to people, accumulate gold, silver, and platinum. But if you want to trade, then trade with a very small amount. Say you have $1 million in gold, silver, platinum. If you're happy to trade, then trade with 100,000 or 50,000. But don't trade with the 1 million, because you may sell and the next day silver, gold shoots up, and then you say, oh, I wait until it comes down again. Then it never comes back down again.
Yes, especially with Janet Yellen in the White House now talking about going big after the balance sheet's already approaching 8 trillion. Dr. Faber, last question for you here. Again, there's a lot of new people coming into silver. We now see the future is down over 3% on the day. You kind of just touched on it, but just from your...
The future is down 10%.
Yep. Yes.
It's down $3.
Yeah. Future is down $3 now. And although for people that are new or for people who have been in silver for 30 years, could you perhaps even just repeat what you just said, where if you have silver, perhaps not trading yourself all day or just go take a walk, is that the best thing that most people can do? Because it seems to me none of the money printing fundamentals have changed since yesterday when it was a couple bucks higher.
Well, the money fundamentals have improved, because if you look at the Federal Reserve, Mr. Jerome Powell, and you look at Janet Yellen, I can say with great conviction, never in the history of the United States, that dates back to more than 200 years, have such incompetent people been at the head of the fiscal and monetary authorities. Never before. And this, in the long run, will be very good for precious metals. Yellen and Powell are a gift from heaven to any owner of gold and silver.
Dr. Faber, you're on fire today, my friend, with some of the best advice I have ever heard in my life, finance or otherwise.
Yellen is such an incompetent woman. It's hard to believe that she could be a clerk in a bank.
Well, I mean, it's amazing given the past Fed chairman and politicians, but I think you put it in great context. in a way that also, perhaps even more importantly, helps ease the tension. I understand there's people with money on the line feeling a little stressed today, so I can't thank you enough for joining me. And perhaps just in wrapping up, you can let folks know where they can find your great website and all the things and services that you share there.
Well, the website is gloomboomdoom.com.
All right, and that is in the description field in the link below. So again, Dr. Faber, sure appreciate you being here with me today. I know a lot of people appreciate hearing from you, and we'll look forward to having you back on here again soon.
Well, thanks a lot. Bye-bye.